Hello and welcome to the first offering of the Business Basics series presented by the Illinois Department of Commerce's Office of Minority Economic Empowerment and the Illinois Small Business Development Center Network. So why Business Basics? This is a collaboration between Illinois' OMEE office, the Office of Minority Economic Empowerment, and the Small Business Development Center Network. It's intended for us to come together to cover some of the foundational topics that we feel will help entrepreneurs be successful. These videos will be short and sweet, and you can rewatch as many times as you need to make sure you get the right content and put you in position to be successful. A little bit about the Office of Minority Economic Empowerment. So we work in the Illinois Department of Commerce to support minorities, women, veterans, and individuals with disabilities who are running businesses in the state of Illinois. Everything we do is about empowering entrepreneurs with information, removing barriers, and helping to build capacity through collaborations like the Business Basics series. And we are so excited to have our partners down at the Illinois Small Business Development Center for the Metro East at SIUE to present the first topic. So with that, I would like to introduce Joanne May.
Hi, everyone. Thank you for joining us. And we look forward to a great presentation today with our accountant. Before we do that, I am going to dive into the SBDC and what the Small Business Development Center does. We offer no-cost confidential advising here in the 9-county region of Southwest Illinois, actually support a couple additional counties as well. So the majority of our time is spent one-on-one individually with new startup businesses and then also existing businesses, established companies as well. We supplement that one-on-one time with workshops and webinars and training opportunities. Along with a great amount of networking and other support in our community, around the community and region. We work with CEO classes for various high schools in the area. We actually just participated in a regional competition that started out of Pontiac, Illinois. We host our own small business competition for businesses that are no more than 3 years in operation. This will be our 9th year this year, 2022. So we're supported by the Department of Commerce and the SBA to provide this no-cost confidential advice and work with our business professionals around the area to create a team, essentially, that our business owners can use as they start and grow their company. One of those great team members and professionals is Jenny Zipprich with KEB Accounting, and she is going to talk today about some of the general accounting areas that you need to know as a new business owner. So take it away, Jenny.
Okay, thank you, Joanne. So my name is Jenny Zipprich. I'm a CPA with KEB. We are a public accounting firm here in the Metro East area, and I've been out this for about 16 years. So I prepare business, individual, trust, estate, taxes, you name it. So let's dive right in. We'll try and keep this pretty basic and high level. The first topic I want to talk about is type of entity. So the type of entity kind of lays the foundation for all the other topics we're going to talk about today. So, you know, when someone asks what type of tax return do I need to file, what kind of business registration paperwork do I need to file? Well, the answer is it depends on the type of entity. So this is sort of the foundation. So I want to run through each type of entity and kind of discuss pros, cons, and basics about each one. So the first one is a sole proprietorship. You can be a sole proprietorship and it does not require a separate tax return. It's simply part of your individual tax return that you already are required to file. A sole proprietorship is really good for a one-person business who just wants to keep it pretty simple and you haven't really gotten too big yet. It's really the easiest form that you can be. A lot of people think that you can't be an LLC and also be a sole proprietor. True or not true, you can be an LLC and be a partnership, for example, or you can be an LLC and still be a sole proprietorship. Anybody can put an LLC shell around their sole proprietorship and get some liability protection there. The next type of entity I want to talk about is an S-corporation. So the next step from a sole proprietorship is really that step to S-corporation. So there is kind of a break point where it makes sense to transition to an S-corporation. I usually advise people when your net income, your net profit is starting to creep up there around $75,000, $100,000. It's actually going to save you income taxes to switch to an S-corporation. So there is sort of a break point there where it makes sense. With an S-corporation, you are required to file a separate business tax return, and the owners are required to pay themselves W-2 compensation. So once you do make that leap, you're now into this world of having to pay payroll, file payroll tax returns, file a separate business tax return. So there are added complexities there, but it does save income taxes at a certain point. Also with an S-corporation, they don't pay their own taxes. So even though a business tax return is required to be filed, all of the income that is made at the company level trickles through and gets reported on your individual income tax return. So you actually pay the tax on the business's income at your individual tax return level. So that's important to understand. The other type of entity is a partnership. So it's very similar to an S-corp in that you do have to file a separate business income tax return. It's also similar in the aspect of any income that the business makes trickles through and flows out to your individual return and gets taxed on your individual return. A partnership's good when maybe you want to have different partners with different stakes. Maybe I want, Mary put more of the capital in, so I want to allocate her more of the profit or more of the distribution. A partnership's going to allow you the flexibility to define all those things however you want. The last type of entity, and probably the most least common, is a C-corporation. And a C-corporation is also required to file a separate tax return. But the unique thing about a C-corporation is that the entity itself pays the tax. So with an S-corp and partnership, we talked about how it flows out to the individual returns. With a C-corporation, the income gets taxed at the entity level. Now, the thing about C-corps that people don't like, and probably why they're not as popular, is what's called a double layer of tax. So not only does the corp have to pay its own income taxes on the profit, but once an owner pulls money out of that C-corporation, they're taxed again on that income on their personal return. So for that reason, C-corps, not a popular choice. And real quick, we touched on this, the LLC consideration. As I said, you can put an LLC shell around a sole proprietorship to try to get that added layer of liability protection. You'll need an attorney to draft an operating agreement for that LLC and register you as an LLC with the state. A lot of partnerships are also LLCs, just to have that liability protection as well. The next topic I want to talk about is record keeping. This is super important not only for you, but your accountants will also appreciate it. The first thing that you want to keep record of, obviously, is your bank statement. So those are the key to all the activity that's running in and out of your business. With the online banking world, I know you can access your bank statements online at any given time, but what if you switch banks or if something happens? Just download those bank statements, keep them in a folder on your computer at the very least. Receipts. So for any expense that you incur, you're going to want to save that receipt. Audits are few and far between, but when they do happen, it's really important just to have those receipts in a file. In date order would probably be best. Deposit slips, not as important, but you'd be surprised the number of times that I asked a client, what was this deposit for? And they can't remember it for the life of them. So just keep detail on what your deposits are for, who they came from, what they were for. Major agreements. So when you start your company, there are certain formation paperwork, and we'll talk about that next, that you'll have to file as just kind of the first step that you take, whether that's an operating agreement, an agreement you might have with each individual shareholder or partner. Those are important documents to keep in your file. The first time you file a tax return, your accountant's going to ask you for all of this sort of information that's sort of the foundation for your business. Maybe you have to get a loan from the bank, and so there's going to be this loan document that you might have to keep that in your file. An EIN letter or your ITIN letter, once you get that letter from the IRS that says this is your identifying number, keep that letter. That is a very important piece of paper. And then lastly, copies of taxes. Most accounting firms are going to retain tax returns for about 10 years. But I usually advise clients, just keep 7 years worth, keep a rolling 7 years worth. You never know when you're going to go back and need to look something up. So the next topic is business registrations and formation paperwork. And as we talked about, the type of entity is really going to dictate what you have to file, what registrations you need to do. So if I'm an SCorporation, I'm going to need to file articles of incorporation. Attorney can help you with that. I believe you can download that form and prepare it yourself as well. If you want to be an SCorporation, you will also need to file a form 2553 with the IRS, which is basically just an election to be an SCorporation. I have not seen one get denied since I've been doing this, but it is a requirement to be filed. For a sole proprietorship, that's easy. You really don't need to file anything unless you want that LLC protection, and then you'll need to register to be an LLC and maybe have an attorney help you with that paperwork. The other types of registrations you might need to file for are withholding or sales taxes. So if you are going to have employees, you will need to get registered for withholding tax. That is a state registration. So each state has their own requirements there. So some paperwork gets filed with the IRS, some gets filed with the state. Withholding is one that gets filed with the state. Same thing with sales and use tax. If you are going to be selling a product that's going to be subject to sales tax, you'll need to get registered with the state to get a sales tax ID number so that you can start filing sales tax returns. And then lastly, which will be unique to your business, maybe you have a special license or permit that you need to get in order to operate. The next topic we want to talk about is accounting. Another very important one that your tax preparer will probably appreciate. So there's a lot of subtopics within this accounting that we want to talk about. And the first is, do I want to be cash basis or accrual basis? How do I want to sort of run and track my books? And the difference there is pretty easy. Cash basis basically says, when I get a check in the mail, that's revenue to me on that day. When I write a check for an expense, that's an expense that day. Accrual basis says, if I'm a landscaper and I go out and do some work, and I come back to the office and send you a bill, you're going to pay me 30 days later. That's revenue today because you did the work today. So cash basis would say, I don't recognize that income for 30 days until I get the check. Accrual basis says I recognize that today because I earned that today. So the first step is really just, do I want to be cash or accrual? Just so you know how to do your accounting. Secondly, you want to decide what software do I want to use? And that's really what makes sense for your company. Can I get away with just doing it in Excel and just keeping track of revenue and expenses that way? And those are good for sole proprietorships where they're just still small and they don't really need the fancy software. Maybe you need to send invoices, create a lot of bills, and so maybe Quickbooks makes sense for your business. Or if you have payroll, Quickbooks allows you to run payroll through it. It's pretty basic and a little detailed, but it does a good job of it. And then lastly, maybe you just don't want to mess with the accounting. Maybe you want to pay an accounting firm to do it, whether it's because you're not educated enough to do it right, or you just don't have the time and don't want the headache. The next little subtopic here is really important, and that is to not mix business with personal expenses. So you want to open a separate bank account under your business name. Same with the credit card. Open a separate one under your business name. Do not mix your business with your personal transactions. It just keeps it a lot cleaner if you keep the two separated. Will also help in the event of an audit. And it also helps to keep that liability protection intact when you're separating the two. And lastly, the question is, how often should I update my books? I would say at least monthly at a minimum. To be able to really tell how your business is doing, I would say probably weekly. I know we don't like client taxpayers who come in and bring us a shoebox and they haven't done any accounting for the whole year. So that can get really messy and it's not really reflective of how your business is doing. So definitely try and stay on top of your accounting if you can. It will definitely help you. The next topic we want to cover is tax filing requirements. And again, the answer to this is it depends on what type of entity you are. So if you're a sole proprietorship, as we talked about, there is no separate tax filing requirement. It's simply reported as part of your individual tax return on a Schedule C. S-corps and partnerships, as we discussed, have a separate business tax return to be filed. An S-corp files a Form 1120-S. A partnership files a Form 1065. A C-corp files a Form 1120. The due dates for these are all unique. Because we talked about how S-corps and partnerships trickle that income down to the individual level, those are due March 15th. And that is because we need to have time to get all that figured out so that we can get, know what income needs to flow to the individual returns that are then due April 15th. C-corps are also due April 15th. The other filing requirement you might have is what's called an annual report. Each state's rules are different on this, but I know Illinois requires annual reports to be filed for corporations. And you'll normally get a notice in the mail, you pay them a little fee, and it's just kind of a report that reports your name and address and who your officers and directors are. But that's another filing requirement to keep in mind. And then lastly, if you have payroll and you're going to need payroll returns filed, you'll need to stay on top of that. Payroll returns usually are filed quarterly. Sometimes you can get away with annual if you're really small. And then sales tax returns. Those have a filing frequency of either monthly, quarterly, or annually, depending on your level of activity. The last topic I want to cover is tax considerations, things to just think about. No one likes that phone call from their tax preparer telling them they owe $10,000 on their taxes. You usually get mad at your preparer for that, but tax planning is really important. You want to reach out to your tax preparer normally in November so that they have time to kind of advise you on things that you can do. So get in touch with them, let them know where your business is for the year. They can do some tax planning and finagling of, either, hey, here's what you're going to owe April 15th, or here's some things we can do before the end of the year to bring that tax liability down. Depending on how much tax you actually owe for the year, this is getting a little advanced, but I wanted to point it out. You might be required to pay in quarterly estimated taxes. If your tax preparer advises you of that, just be sure that you pay them. You can incur underpayment penalties if you don't. Be aware of all the tax deductions and tax credits that are available to you. So if you're a sole proprietor, for example, working out of your home, there's what's called the home office deduction. So it's based on square footage. You just take that ratio of how big your home office is compared to the total square footage of your house, And you basically get to take a portion of your real estate taxes, your mortgage interest, your homeowner's insurance, utilities, and you get a deduction for that against your business income on your Schedule C on your personal return. R&D credit, research and development, is another big one that's missed a lot. If you're doing any sort of business related work that's new, unique, you're researching something that's not out there yet or hasn't been done before, there's a research and development credit that you can get on your return. It's a big credit that a lot of people don't think about or miss out on. And then lastly, just want to cover real quick that if you are a foreign entity or a U.S. non-resident, that maybe you don't have a social security number, you can get what's called an ITIN, an individual taxpayer identification number. And that's going to allow you not only to file a tax return, but some banks will even take that as opposed to an EIN to let you open a bank account, get a bank loan. So just keep that in mind, that the ITIN can sort of take the place of an EIN for certain items. And that wraps up everything that I wanted to cover today.
All right, Jenny, thank you so much. Very detailed presentation. All of the high level points that we want entrepreneurs to be aware of as you are entering into your business endeavors. I love that you broke it down by sections. And what we'll do is we'll actually post the outline that was used along with this video when we put it into our library. We invite you to rewatch this amazing content as often as you need to. Please feel free to take some notes and be sure to connect with the Illinois Office of Minority Economic Empowerment or our partners at the SIUE Metro East. So what I want to do is just make sure you see our contact information. And again, we serve minorities, women, veterans, and individuals with disabilities throughout the state, sharing our contact information here. So on behalf of the Office of Minority Economic Empowerment, my name is Matt Simpson. Thanks again to our partners at the SIUE Metro East Small Business Development Center. And until next time, have a great day.